the title of the presentation is actually called The Insider Secrets of How to Save $25,000 on a home loan, because what I do is very different, and it's about keeping, how many people actually want to keep more money in their pockets when it comes to buying a home, right? Oftentimes you can get a home loan almost anywhere, depending on what you make, but the goal is actually to keep a lot more money in your pocket when you're going through that process. So it's the insider secrets of how to save, on average, about $25,000 on a home loan. So first I want to say thank you for coming here. Saturday mornings you got lots of things you're doing, right? But to come out to spend a little time learning about this home buying process will absolutely save you a lot of time, and it will save you a lot of money. So let me tell you, before I share with you how to save $25,000, would it be okay if I shared my passion for mortgage lending and how I got into this? So way back in '87, maybe before some of you were born, I began working at Commercial Center Bank, about 5 miles from here. And I knew nothing about mortgage loans. I saw a lot of loans come across my desk, some with low rates and low fees, and some loans with high rates and high fees. And I learned that different loan officers and lenders were getting rich off of borrowers because they were able to convince the borrower to go at a higher rate and a higher fee so that the loan officer or lender could make a lot more money. So I learned, in the process, I learned about mortgage loans. I've learned about loan programs. I learned about rates and fees. I also learned about the loan officers, which ones were really good and which ones you really wanted to actually stay away from. And I learned a lot about lenders in the whole process. So after working there about a year, I found out my brother was purchasing a home out in Palm Springs, California. I said, okay, great. I wasn't a licensed loan officer. Hey, come on in. I wasn't a licensed loan officer at the time. I worked in a department setting the rates and fees. And so I said, Greg, I actually know where the best rates and fees are. Why don't you send me over your paperwork and let me take a look at it. So here's a picture of my family. I'm on the far right here. I have a special needs daughter. She's in front of me. My dad's next to me. My son is on the other side. Mom's in front, good old mom. And then my brother's family is in the middle. Megan, Kim and Greg, Megan and Nathan. So he's my brother. He trusted me. So he sent me over his paperwork. I took a look at it. And on a $100,000 loan, I could see that he was overpaying by about $5,000. It's a lot of money, 30 years ago. So I went back to him. I explained how he could save money on his loan. The interest rate and the fees that they were offering him were not good, and that how to get a better deal on his loan. So with the inside information that I had, I was able to save himself almost $5,000 on his home loan. So for the next 23 years, I continued to work at banks and mortgage company, earning a salary, not actually doing loans, but working in the department. At the same time, I told my friends and family that if they were getting a loan with any lender out there, let me know what they're getting, and I could tell them whether they're getting a good deal or not. And so over the next 23 years, I helped my friends and family save thousands and thousands of dollars on their loans because I helped them understand where they were at, if they were getting a good deal or not. And I did it for free because I enjoyed my job. At the same time, I really enjoyed helping people save money on their loans. So let's kind of go back through what my qualifications are. I've got 30 years experience in the mortgage industry. That's a lot of time. I also have worked at different banks and mortgage companies. I actually have a license now to do loans, but I don't actually do the loans myself. And my business has what's called a broker's license. So we can do businesses like this, and we're licensed by the Department of Real Estate. And lastly, I'm the inventor of Mortgage Fee Coach. And how is that different? Why would I do this versus just going to work at a bank or a mortgage company? Well, because if you have a service like what I do, I don't represent any lenders. I represent all loan programs. So I can help you get the best of the best by helping direct you to better deals than you're going to be able to find on your own. The reason for this workshop is because about 5 years ago, I was helping a friend of mine, Kevin, one of my buddies, with his mortgage loan, helping him understand if he was getting a good deal. And I asked him, would you actually pay for a service that does this to help an independent person that's helping make sure you get a better deal? And he said, absolutely. Everybody needs an independent third party that's really going to look out for the client's best interest. And it's not about selling them something. It's not about earning a commission. It's about helping keep more money in their pocket. So I don't represent any lenders. So I'm not trying to sell you anything. If you need a loan, I want to help you get the best deal you can, whether it's financial assistance programs, loan programs, etc. At the same time, what's different about me is I represent all loan programs. I can go out there and I can connect to individual lenders that may offer one specific portfolio loan program that you can only get by going to them, and unless you know who that lender is, you'll never find that program. And there's some amazing loan programs that aren't offered by big banks or mortgage companies that will absolutely keep a lot more money in your pocket if you know they're available. Also, I represent all financial assistance programs. If you go to a lender and you say, how many financial assistance programs are there? How many do you offer? There's over 280 financial assistance programs, where if you go to a company, a bank like Chase, they don't have any. So they'll just say, sorry, we can't help provide any additional money for you. And maybe you have, how many people in here have a friend that has bought a home, knows a lender, right? So what's different is information from friends or family members that may have gone through that process. That's great, that's their experience. And it may be very limited. But what I want to show you is there's so much more information out there that if it's available to you and you want to, you can save a lot more money on a loan when you go through this process. So first, let's talk about buying a home. Thank you for being here again. Buying a home, congratulations to you. It will absolutely change your life, as we all probably know somebody that owns a home. At the same time, it is one of the most complicated and stressful transactions you will ever go through, at least the loan portion of it. Maybe looking at homes, it's a lot more fun, but the loan portion is, let me tell you, it's kind of painful. At the same time, it is one of the best decisions that I've ever made in my life and one of the best investments. I've got some friends of mine that are very wealthy, have businesses, they built the business up, and I've got other friends that are very wealthy because they bought real estate. And they paid off and then they bought a little bit more real estate over time. And they're very wealthy because real estate has tended to appreciate over that period of time. And for example, the house that I purchased in Yorba Linda 30 years ago, I paid $192,000 for it. Today, it's worth over $700,000, 30 years later. So it just shows you by buying real estate and paying it off over time, it increases your net worth. What's the problem for home buyers these days? I think one of the biggest problems is, who do you trust? One of the people, and I'm getting ready to put a testimonial video out. I talked to a woman that attended one of my homebuyer workshops a few months ago, and she said, my husband said, don't trust anybody. And I said, you know what? You actually do have to be careful in that area, because the challenge is, when you talk to a loan officer or lender, they're driven by a commission. If they can get you in the door, then they have a chance of earning a commission. So the challenge is, who do you trust? And when it comes to buying a home, whether it's the loan process or whether it's the purchase of the real estate, you absolutely have to surround yourself with a really good team of people that you really do trust, that communicate well. Also, with the information age, it's easy to go online. There's a ton of information out there. And let me tell you, how many people think all the information on the internet is 100% accurate, right? Right, no. So there is very accurate information. You just have to know where to get it. And again, there's so many companies out there that are really trying to sell you stuff. You really have to be careful about it because it may not necessarily be in your best interest. Now, many people think, oh, yeah, I need to put 20% down payment to buy a home. That's absolutely not true. To get a great deal, yes, putting 20% or more down is to your benefit, and there's reasons for that. But you don't have to have any down payment. There's great zero down payment loan programs. Also, you don't have to have perfect credit. I'll talk a little bit later about it. The better your credit score, the lower your rates and fees, but you don't have to have perfect credit. It's okay. So why purchase a home? Well, low interest rates. When I purchased my first home 30 years ago, my interest rate was 10.25%. And it wasn't on a fixed rate, it was an ARM. And I thought I was getting a good deal. So in the big picture, interest rates are still incredibly low, and I do expect them to increase, so the sooner you're able to buy, the better. Also, with a home loan, your payment is normally consistent monthly payments. So that way, it's not like your rent may go up every year and you have no control. Come on in. Hey, good morning. So you have consistent monthly payments. All right. Thanks, Ron. Also, maybe you're aware of this or not, but when you're paying interest in your mortgage payment, it's actually deductible on your taxes. So maybe your payment on your loan is going to be a little bit higher than your rent, but that's okay because at the end of the year, you're going to be able to take that interest portion and deduct it on your taxes. And with the new tax laws, as long as your loan amount is less than $750,000, which probably everybody here is going to be that way, that's when you're going to be able to deduct that interest. Also, in general terms, housing values continue to increase 3 to 4% a year. So again, it's a great time to buy a home. And lastly, to buy a home, you have control of your situation. You can have dogs, cats, parrots, whatever you want. You can knock out a wall, you can paint it whatever color, you can put a jacuzzi in the backyard. So you have control of your setting. So let's talk about some of the meat of the presentation. So a mortgage loan. Everybody probably knows what a mortgage loan is. It's a loan given by a bank or a mortgage company or other financial institution for the purchase of a residence. Pretty simple stuff. The interest rate is either fixed or adjustable. Depending on what your situation is, some people may want to get into a 30-year loan. It's fixed. But on average in California, people tend to stay in a home less than 10 years. So it's good to consider an ARM loan that may be fixed for 5, 10, 15 years. It may be a better deal for you. And again, the loan payments are made monthly. So let's talk about what do the lenders need from you. This is the basics. How much money do you earn? They're going to want to know because the more money you make, the higher loan amount you're going to qualify. But the challenge is if you are salary or self-employed. If you're salary, then your income is consistent. That's great. Lenders like consistency and easy income. But if you're self-employed, like many people are these days, well, you don't really try to declare too much income because you want to avoid taxes. And that's okay. The challenge is if you're self-employed, you're going to have to show still some consistent income. And depending on the lender you go to, certain lenders will see you make plenty of income and you are writing a lot off in taxes, but you still make plenty of money. Other lenders will look at that as just like, okay, you make 80, you write off 40, so you only make 40,000. They're not really going to give you much of a loan. So if you're self-employed, the point I really want to make here and to write down, if you're self-employed, I highly suggest people start the loan process much earlier, because you want to connect with a lender that will look at your income and say, okay, well, depending on what your income is, that you're going to be able to qualify for this. And maybe what you want to do is you actually want to show more income and write off less expenses. So just because you make, I talked to somebody the other day, they made $250,000, but they wrote off $150,000. It's like, okay, well, before you do your taxes, let a lender take a look at it, and they will tell you how much money you qualify for now, and if you change things, how much you'll qualify if you declare more in income. Also, if you're paid with bonuses, or you have any side jobs, and maybe you get a cash, well, you know what? If you're paid in cash, that's a problem, because lenders can't track cash. So any side jobs you do, you're going to want to have a track record of those payments by check, so that the lender can, if you want to use that income towards the loan, so that the lender can track how much you make. So for instance, I did a loan for two brothers about 5 years ago, Mike and John. They're a video on my website, and they came to me, and so John works for a company, earns W-2, consistent salary. Mike, he's a gamer. He got all of his payments through PayPal. So they went to apply for a loan, they were ready to go, but unfortunately they didn't qualify for as much of a loan amount as they expected, because I think maybe they made probably $180,000 between the two of them. And unfortunately they had to settle for a condo because they couldn't document Mike's income. So just saying, be careful. Next, let's switch to employment. With employment, how long have you been on your job? That's important. Normally, most lenders will say they want you to be on your job for 2 years or more. I'm saying that there's loan programs out there that you can get a loan immediately after graduating from college. There's zero down payment loan programs. But the longer you're on your job and the more consistent your income, the easier it is for the lender to approve you. Normally you want a minimum of 1 year's steady job, and if you change jobs, it's okay if it's in the same industry. If you change industries, lenders are going to have kind of an issue with that. So again, the longer the employment, the more consistent, the better. Most lenders will want to see 2 years of steady employment if you're self-employed. But what I want to make a point of, and this is something you're going to hear at this workshop and at no other, is there are lenders out there, individual lenders, that if you are self-employed for only a year, they will give you a loan. Competitive rate. I mean, we're not talking high rates. You just have to know which lender to go to. Now let's switch to credit score. So how many of you actually know what your credit score is? Okay, everybody. Awesome, that's great. Credit score is very important when it comes to the loan. It's based on what your payment history is. Have you made it consistently? The credit scores actually help determine the rate and the fees you're going to get. So the higher your score, the lower your rate and the lower your fees. So you want to actually work pretty hard to raise your credit score. The FICO score. So, but as far as you may know what your credit score is, but did you get it from a company like Credit Karma? Anybody? Nobody? Okay. So here's information you'll hear nowhere else. The credit score from Credit Karma is free. And when it's free, oftentimes it's not really worth very much. Credit Karma is actually a marketing company. They want your contact information so they can sell you things. And they can sell your contact information to other companies. So as soon as you signed up with them, you probably received more mail, more emails, things like that. And they're trying to sell you something. So the credit score from Credit Karma may be as much as 100 points off what an actual mortgage credit score is. So my point in this is, I suggest people do not use Credit Karma, get off their system, or don't rely on it at all, because it's inaccurate. And if you think your credit score is 740, When it's actually 640 when you go to apply with a lender, that's a problem because then it's going to cost you more for a loan. What about credit scores from credit card companies? Well, they're much more accurate. They get the scores directly from the credit bureaus. Oh, interesting fact. So the credit bureaus actually put out over 240 different scores, and they sell them to companies like Credit Karma. So Credit Karma's score is actually a score, but it's just not a very accurate one because it's I don't know how it's so far out, but it is. So the credit card companies actually purchase a more accurate score. So I actually have a Discover card, and it's on my statement every month. I watch it, and it keeps me in contact with where my score is. I like it. But what if you don't have a way you can get your credit score on your own? So if you want to, hey, thank you. So as long as I have your phone number, email, and name, I'll send you instructions on how you can get a credit score, an accurate credit score for $1. And it's a credit score from each one of the credit bureaus, as well as a credit report. And I'll be glad to send that to you for free, so you can go out there and get your own scores. It's a great way to check all 3 credit bureaus. And important point, how many of you have a credit score of 740 or greater? Okay, that's awesome because interesting information. If your credit score is 740 or higher, you will absolutely get the best rates and the lowest fees. So I always encourage everybody to work to manage their score and get it above 740. Now the credit scores range from 300 to 850. So if your credit score is 740 or 850, it's all the same when it comes to a mortgage loan. Here's a picture of my credit score. So way back here's September 2014, and here is July 2015. So interesting story. So back in January 2014, I went to the doctor. I paid my copay, and I expected insurance to handle the rest of it, about 120 bucks. So over time, 2, 3, 4 months, insurance was communicating with the doctor, and for whatever reason, insurance didn't pay for it. And so the doctor sent the balance to a collection agency. And all of a sudden, I got a call from a collection agency. They said, hey, is this Mr. Stone? It's like, yes. Well, you owe $124 for a visit you went to see with Dr. Ahern. Like, as soon as I got that call, I knew that was a bad thing because I knew collection agencies and money and credit scores, that's bad. So I said, okay, I understand, yes. Yeah, you know what? If I pay this right now, will you remove this from my credit report? And they said, sure. So they took my money and they hung up the phone. I thought, great. I took all the confirmation numbers down, who I talked to, and about 6 months went by, and I tend to pull my credit report every 6 months, and I looked at my report, and the collection was still on there. So I had the information. I called up the collection agency, and I said, hey, wait a second. You said you were going to remove this from my credit report if I paid it. And they said, oh, sorry, Mr. Stone. We must have forgot. We'll take care of it. And they hung up the phone. Did they? No. No, they didn't care. They had their money. They weren't going to work a second longer on my collection. So what I did over the next 3 years is I started to arm myself with information. I read everything you could about how to raise your credit score on your own. And so I learned in the first couple months that interesting information that a doctor is not supposed to report that information to a collection agency. It's actually confidential information. So I was able to get that removed, and over the course of 6 months, I was able to raise my credit score by over 100 points. If your credit score is below 740, there are ways to raise your credit score. You want to manage your credit score. And there's ways you can do it on your own for free, or you can actually hire a credit repair company. Now, here's one of my concerns is So I mentioned before I have a special needs daughter. She has a sitter. Her name is Tennille. I talked to Tennille about a year ago, and she said, "Oh, Dan, my score is terrible, and I hired this company to help me raise my score." I said, "Okay, which company?" She told me. It's not good. So over the course of 9 months, she'd already paid her money, and I just checked back in with her about 3 months ago, and I said, "So, how much have they raised your score?" 0. She paid $600, and after 9 months, they hadn't raised her score at all. So my point in this is, I actually have connected with 21 different credit repair companies. There are legitimate companies out there that can raise your score, but there's a limit on what they can do. So my point is, for one, if you don't want to go to the effort of raising your score on your own, and you want to hire somebody, you can, but be very careful with who you want to hire, because there's companies out there that will take your money and not do a whole lot. So check with me. I'll be glad to talk with you about it. I have clients that actually have used credit repair companies and have raised their score. They're very happy, because you can raise it in 2-3 months, depending on what your situation is. So also when it comes to credit scores and credit reports, what do lenders need? They're going to actually look at your credit report. They're going to make sure everything on there, they're going to go through it. Oh, first I want to mention, so if you want to get a free credit report at any time, you can get one from annualcreditreport.com. Now you can get a free report from each one of the bureaus once a year. So what I do is every 6 months, I go to a different credit bureau and I pull my credit report. I always make sure that the information on there is accurate, because unfortunately, people use different people's social security numbers and lots of stuff shows up. You want to make sure it's accurate well before you go and apply for any loan. And if there's any errors, you absolutely, if you're going to do this on your own, you want to work on it months in advance, because even though we're in the technological information age, credit reporting companies, you know what, they don't really want to work on that kind of stuff. So it just kind of takes a back burner. They don't make money from it. So it's going to take you 2 to 6 months to get it removed. What else do lenders need? Lenders are going to need a copy of your driver's license, passport. They're going to look to see if you have a work visa, if it's not expired. And important item here, if you do not have a social security number, you can get a loan. There are lenders out there that will give you a loan with an ITIN. There's individual lenders that offer individual programs. I know of only two programs out there for just that. But also, if you have an ITIN and you are with somebody else that has a social, there's also loan programs that will help you. You can actually use that income to help you qualify. But if you're going to go to somebody like a Chase or B of A, they're just going to say, sorry, you don't qualify. Also, lenders are going to need to know how much money you have in the bank. Cash, savings. There are zero down payment loan programs, but they still want to make sure you got some money, right? To pay for closing costs, things like that. Pay for the down payment, if that's what you're going to do. To pay for any closing costs. They're also going to need money for what's called prepaid items. So they're going to ask for money for you to put into an escrow account, 6 months worth of taxes, 6 months worth of homeowners insurance, and it's like a little bit of a cushion, so to make sure you've got that money in there. Also, they're going to want to make sure that you have a separate account, or it's in your account. They're going to want to make sure you have what's called reserves. So in case you lose your job, you become hurt, medical condition in any way, they're going to want to make sure you have some sort of a cushion, so that if that happens, that you have some money to be able to keep making that payment. Because really, in working at banks and mortgage companies, they don't want your home. That's a lot of work for them. They just want you to make that consistent payment. So depending on the loan program you choose, they'll want to have anywhere from 2 to 6 months in reserves. So that's what mortgage lenders want from you. Now, what should you want from a mortgage lender? Let's go through that. How many people are ready to buy a home in 3 months? Okay, if you're ready, no? Okay, that's fine, lots of time, good. I want to absolutely make this point very clear. Every one of you is different. And just because one of your friends got a loan somewhere doesn't necessarily mean that that loan program or that lender is right for you. There's a ton of loan programs out there. And also there's financial assistance programs that will help you with your down payment and your closing costs. So let's talk about what loan program is right for you. You're also going to want to deal with a quality mortgage lender. Not somebody that just opened up the other day, but really somebody that knows the business really well. And this is true too. You really want to make sure you work with a loan officer that really has 5 years or 10 years experience, because let me tell you, in working in this industry, there's a big difference between a loan officer that's got 10 years experience and knows how to take all of your information and say, okay, I don't need this, I don't need this. Okay, this is what I want to present to the underwriter, because I want to make it a real clear picture. And there's big differences between loan officers that present the right information to the underwriter and get the loan approved. And lastly, hopefully, you want to keep as much money in your pocket. You want a lender that's going to offer you the lowest rates and the lowest fees. So let's talk about financial assistance programs. So how many people in here have already talked with a lender? Anybody? Oh, okay. So one of the questions to ask them, how many financial assistance programs do you offer? And is there one financial assistance program or more than one that may be right for you? What's interesting is there's over 280 financial assistance programs available, and no lender offers all of them. So just because they offer a financial assistance program, and the other question to ask, is that loan officer experienced in that financial assistance program, or is he going to say, oh, I'm not experienced, we can't do the loan, or you need to talk to this other loan officer? You want to, if you would like it, you want to look at financial assistance programs because they keep a lot more money in your pocket. Also, these programs pay for the down payment, or maybe pay for the closing costs, thousands of dollars. And these programs are very different. So, of course, when you have 280 different programs, everything's going to deal with it a different way. So some of the programs are what's called a grant program, where they actually give you money and you don't have to pay it back as long as you stay in that home for a certain period of time. Normally it's 5 years. That's kind of cool. The other part of the program is there's programs which they give you a second lien or a junior lien. And what that does is they let you borrow that money. That money may be a cost, they may actually charge an interest rate to it, or they may not. And ultimately you're going to have to pay that money back over time, and some of it may have additional interest charges, so you just need to be aware of that. It's okay, normally the interest rates are pretty low. Or maybe you just pay it back when you go to sell the home. It's a long ways off. So those programs are available. Now, what are the requirements of some of these financial assistance programs? Well, they're going to want to make sure you're a first-time home buyer. What is that defined as? As long as you haven't owned any real estate in the last 3 years, then you qualify for these programs. Also, there are income limits. Most programs don't want you to earn more than a certain dollar amount for a specific county. So there are limits. There are programs that don't have limits, but most of them do. Also, they're going to want to make sure you have a certain credit score. There's a credit score minimum requirement. So they don't want to just give it out to anybody. And they're going to want to make sure you occupy the property the whole time. So they don't want to give you a financial assistance program and then in turn have you turn it into a rental, because that's not what the program's all about. They're trying to give more people an incentive to buy homes. There's also a program which I talk about at every workshop and every opportunity that I present. There's a zero down payment loan program, which is just wonderful. And let's go through some of the benefits. And again, this is something you're going to hear at this workshop. Write this down versus anywhere else. It's only offered by one lender in California. It doesn't require any down payment. It doesn't require any closing costs, which normally is about $3,000 to $4,000. It doesn't require any origination points or lender's fees, which is anywhere from $500 to $2,000. It doesn't have any income restrictions, and you don't have to have perfect credit to meet this program. What they do want to make sure you do is you don't have any 30-day lates on any of your payments in the last 12 months. Kind of a great program. And also, normally in the big picture, if you put less than 20% down on a down payment, you're going to be required to pay what's called mortgage insurance. Kind of complicated. I'll explain it later. But this program does not require you to pay any mortgage insurance. And now you would think the interest rate with this program has just got to be, okay, what's the catch, right? I checked what the rate was on Thursday. It's 4.125 for 30 years. So it's a great program. It works for some people. It's not a program you're going to get tomorrow. It takes normally 3 to 6 months to go through it because there's so many people that are trying to get into it. But it's a great program. Talk to me later about that program. And as I said before, it's a below market 30-year rate. The 30-year rate for a basic conventional loan is about 4.375 right now. So this rate is actually a little bit lower. There are other zero down payment loan programs. There's a loan program that goes up to $500,000 in Orange County and surrounding areas. Again, it's a great loan program. It does require you to pay what's called mortgage insurance. So it's another option. There's also, if you're a professional, again, there's individual lenders that offer these programs. If you're a professional like a doctor, lawyer, CPA, dentist, if you have a professional degree, there's a program that actually goes up to $850,000 and zero down payment. Great program. That one does not require you to pay any mortgage insurance. There's also programs like the FHA. You probably heard about that one. Now, FHA stands for Federal Housing Administration. It's a government program. It's a great program. It's been around for a long time. It requires you to only put 3.5% in down payment. That's great. And that's one of the most common programs that's offered out there in the marketplace. Your minimum credit score, the way the program was written by the government is you have to have a minimum credit score of 580. The challenge is many lenders out there, like a Chase, a bank, B of A, Wells Fargo, they're going to require you to have a credit score of 640. So going to them, if you have a credit score below that, they're just going to say, sorry, you can't get this loan. And my point is, especially with this workshop, that you can actually get approved for that loan. You just have to go to a different lender. You have to know who to go to that are going to approve a loan between 640 and 580. Now, one of the negatives, the big negatives with the FHA program is they require you to pay an upfront mortgage insurance premium, which normally is about $10,000. And the other negative is the mortgage insurance premium you have to pay over the rest of it, you have to pay over the life of the loan. So regardless of what your loan to value is, doesn't matter. They're going to require you to pay that $100, $200, $300 a month for the life of the loan. So you can get in with 3.5% down payment and have a low credit score, but there's other negatives. You're going to pay for it. Another option is actually the conventional loan program. So what's great about it is it's offered by Fannie Mae and Freddie Mac. They're not actually government entities. They're subsidized. They're privatized. The minimum down payment with a conventional loan is only 3%. Okay, so it's a little bit less. But they actually require you to have a higher credit score of 620. And the fees are more when if the lower your credit score, the higher the fees. And the rate on the conventional loan program is actually a little bit higher than FHA. So but once you pay your loan amount, down to 80% of the value of your home when you purchased it, then you can remove that mortgage insurance. And also, are there any veterans in here? No? Okay, that's fine. There's a VA loan program. VA stands for Veterans Administration. It's actually a program that's wonderful. 0 down payment. They go down to a minimum credit score of 500, and the seller may pay some of your closing costs. So it can be a really good program for veterans. So we're really trying to encourage the veterans to get out there and buy homes, which is wonderful. So let's talk now, instead of talking about programs, financial assistance programs, let's talk about the loan process. What are you going to go through? First, most lenders you're going to go to, they're going to say, hey, we want to do what's called a pre-qual or pre-qualification. They're going to get some basic information and they're going to say, okay, well, you make $100,000 a year, you qualify for a $500,000 loan amount. They're going to spend maybe an hour doing that. That's great. Kind of gives you a general idea what you qualify for. But what I'm suggesting you do is go out there and you want to give them all of your information. You want to ask them for what's called a pre-approval. That means the lender is spending money, they're connecting with your bank, they're connecting with your employer, they're connecting with the IRS, and they're verifying all of that information. Now, why do you want a pre-approval? Because if you are pre-approved and the only thing that's missing is the property address and the appraisal, then you're going to be equal to a cash buyer. It's going to make you much more marketable. But most lenders don't offer that. You have to ask for it. The reason they don't offer it is because it costs them money. It takes them time to go through the processing of the loan. It takes them time to connect with everybody. So to make you a better borrower, you're going to want to have a pre-approval. Also, plan for the loan process to take 30, 45 days. There's a lot that goes on connecting with everybody. Give yourself plenty of time before you actually want to go out there and start looking. And if you talk with any realtor, and I'll talk about the realtor portion in a little bit, a realtor really doesn't want to talk to you until you've been at least pre-qualified, because they don't know how much of a loan amount, how much of a purchase price you qualify for. And lastly, if you're interested, and I have your email address, phone number, and name, I'll send you a list of the documents that a lender is going to request from you. You don't have to pull it together now, but it's good to know. It's good to see what they're going to be looking for, so that way you can be prepared. Now, what about finding a mortgage lender? There's a mortgage lender in almost every corner, right? Almost anywhere you go. I get asked this question all the time. Is there one best lender? Absolutely not. Because every one of you in here is different. You have different credit scores, different income, different down payment. You're looking for different things. So there's no one lender that offers the best loan program for everybody. There's lots of ones that say, hey, we'll do the loan really fast on your phone, but what you're giving up is you're giving up so many other loan programs and so many other financial assistance programs. One of the questions to ask them is, do you have a financial assistance program that works for me? Again, this workshop is about keeping more money in your pocket. And oftentimes I get asked about online lenders. You know, there's a ton of them out there, the electronic age. But the challenge is, who do you trust? You're sending your information over electronically, and oftentimes they're just trying to make a commission. Let me tell you a short little story. I wish I had a picture of Larry and Michelle, but so Larry and Michelle, actually one of my reviews on Yelp. Larry is a veteran. Larry came to me about 1.5 years ago, and I met him through my church and said, I want to hire you to help me with my loan. And I took his information and I said, well, there's a good local lender here which I suggest you use. He's like, well, Dan, that's great, but this online lender I've been talking to up in Northern California has the same rate. I really want to go with them. I said, I really don't suggest it, but whatever you want. So my process is I stay, once a borrower hires me, I stay with the borrower throughout the process until the loan is funded. So he put an offer on a house in Laguna Niguel, 90-day escrow, which is a long time. And so he submitted all his information to the lender. They worked on the loan a little bit at the beginning, but we didn't really hear from the lender for about 40 days. About 45 days from when he opened up escrow, all of a sudden Larry gets this email from the lender saying, oh, by the way, your fees went up by $14,000. We miscalculated something. And so Larry calls me up and says, Dan, I got this email. It says I owe $14,000 more. What are we going to do? I said, it's okay, Larry. I understand this industry. Let's take a look at it. Let's see if it's justified. And we did, and it wasn't. So if Larry didn't have somebody like me involved, he would have just paid it because he said, Dan, I have to have this house. My wife loves this house. I would have paid it unless you were involved. So my point in this is you have to be careful with online lenders because there's a lot of what's called bait and switch. So they'll give you a great interest rate up front and everything looks wonderful, but then it changes from beginning to end. So in their case, they were going to be charged $14,000 more than they needed to. What we did is we went back, we talked to the lender, we went through the issue, the fees and said, we're not going to pay this. Amazingly enough, poof, the fees went away. So you really have to know what you're doing to make sure lenders aren't going to overcharge you. Another short story, don't have a picture of my, so I have a girlfriend, her father is actually refinancing his home, pulling a little cash out, talked with one of those online lenders, and he thought, okay, great, 4%, 30 years is what I need, okay, I'm going to go. And then I talked to him at dinner the other night. I said, that's a good rate, but you know what? That's not the loan program you need. You can go with something different. And I'm going to save him about 0.5 point in rate with a different loan program. And it's all because that online lender was just going to force him into that loan program that was going to work well, and that loan officer was going to make a nice little commission. And he didn't look at the big picture. What does this borrower really need? So I'm just saying, be careful. Also, when it comes to finding a mortgage lender, there are big differences between lenders. I highly suggest borrowers use a local lender. Why? Because if something goes wrong, you want to be able to go into their office and you want to be able to deal with the loan officer, their manager, the president of the company directly. If you're going to deal with it over the phone, how does that normally go well? And when the person's back in Chicago or North Carolina or Florida, it's hard to get those issues resolved. Also, when there's big differences in lenders, so as I mentioned before, the FHA loan program, the minimum requirement is only 580. But the challenge is certain lenders like B of A and Wells Fargo, they actually have a higher credit score requirement. So you have to be careful. And if you have a lower credit score, oftentimes you can be approved by another lender. You have to know where to look. There are lenders that do want to lend more money to you, but they don't have the big publicity and the big marketing campaigns that the big banks have. Now lastly, what else do you want to know? You want to know about a loan officer. I talked about that a little bit before. You actually want to verify their license. How long have they been around? And you also, how many years experience do they have? Because if you deal with a loan officer that has got their license yesterday, or is just recently got it, you know what? There's a lot that goes into packaging a loan, and you want somebody that's experienced. You want to have somebody that's a really good communicator. And here's an interesting fact that you won't hear anywhere else. Loan officers, different loan officers at the same company, you'll get a different interest rate from them based on the number of years experience they have and the commission level that they've been able to negotiate with their company. So different loan officers will give you different rates. Not good for you, right? And also, and this is really important as well, when are you available to talk about your loan? Are you going to, if you're dealing with an online lender and they're back east and they work from 8 to 5 and you're on the West Coast and you want to deal with an issue at 7 or 8 o'clock at night, not good. You want to find a loan officer that actually is available in the evening. You have their cell phone number. So what are the benefits of what I do? Why do I do this? Well, I totally do this because I want to help borrowers get approved for loans and keep a lot more money in their pockets. So what do? I shop for the loan for you. I shop for the credit repair company. So if you want to know a reputable credit repair company to go through, I actually give you the companies to use that I've had great experience with. So you can get their NMLS number, and you go to nmls.org, or I forget, but yes, exactly. Also, I look for financial assistance programs. If you want to go out there and you want to look at financial assistance programs, go to a lender, ask them what they offer. That's great. Maybe they offer one or two. I look at all 280 financial assistance programs for you and see which one you fit into. Also, if you want access to some of these zero down payment loan programs, each one is offered by a different lender. You're going to have to go out there and find those. I actually know which lenders offer those zero down payment loan programs. And there's other unique loan programs called portfolio programs. There's a great program that I've got more and more clients going into right now that's called the 15-15. It's fixed for the first 15 years. It's got a 30-year payment, but what's great about it is the interest rate is about 3/8 of a point lower than a normal 30-year. So you have a 30-year payment, but yet you're going to have a lower cost for the first 15 years. And it's for those borrowers that are going to move in 15 years, but you still have a 30-year payment. Great program. Also, I shop for the lender for you. I've connected with hundreds of lenders. I know which lenders you can really throw out the door. They're just in the middle. They don't offer great rates. They offer the usual programs. I'm always looking for the best of the best lenders that have really experienced loan officers and great loan programs. So there's certain lenders I go to for only one program. That's it, because they're better at it than anybody else. Also, the benefits of what I do is, as I said before, I've connected to hundreds of lenders. I have access to flexible loan programs. Like if you're one of my success stories is a realtor. Realtors had no lenders, right? This realtor couldn't get her loan done with any of the lenders that she used. She needed to refinance her own property and then 3 of her rental properties. None of them could get it done. She came to me because a financial advisor suggested she did, and I was able to get all 4 of her loans approved, and it was based on her only having great income 1 year. You have to know which lenders offer the more flexible loan programs. And if you know a lender, I compare the rates and fees and loan program of that lender versus the lenders that I know. And I come back and I bring that rate and fee comparison to you. If the program and the lender you're using is top notch, I'll tell you and say, you know what? I suggest you keep going with that lender. You don't necessarily need my service. You're going to get a great deal. Keep going. And people have appreciated that. I don't want to sell my service to anybody that's not really going to benefit, whether it's financially or just having somebody to watch out for them. So I will actually discuss the findings with you for free, just to make sure you're getting a good deal. I will save you time researching lenders, programs, and my average client actually saves about $25,000. And here's the last part. So how many businesses do you know all of their reviews are 5 stars? All of them. Check me out on Yelp, Angie's List, Google. Check on Yelp, check the recommended and the not recommended. Something about Yelp is if you've only put out 1 review on there, they will put you in the not recommended category. And my clients have said, yes, I want to give you a review, but They're not big Yelp users. Some of my clients, I'm actually saving $400 and $500 a month in their payment versus a lender that they were going to use, because I found them a lender with a much lower rate or a much better program. So I encourage you, and if you want to check out my website, so Rob and Jackie, some of the people, friends of mine that I helped out 6 years ago, they were going to go to B of A, or I should say they did go to B of A to refinance their home. I showed that they were not getting a good rate from them, that they could get a better rate by about 0.5 point with a different lender. And for the last 6 years, they've been saving $100 a month in their payment. And they only paid me $700. So they've saved over $7,000, and they will continue to save $100 a month for as long as they keep that loan. That's a pretty great return on your investment. So on the Monday, as long as I have your email address, phone number, and name, I will send you out a list of the documents the lender's looking for. I'll also send you instructions on how to get your credit score for $1, credit score and credit report. Now, I would encourage you to start today. Sign up. Let's just talk. If you sign up for a session, I'll take $50 off my fee. My fee is only $697. Very fair. And again, I'm all about keeping a lot more money in your pocket. If somebody's not going to benefit from it, I don't charge anything, because that's not who I am. So again, my business is about keeping a lot more money in your pocket, not the lender's. Thank you.